Okay, g'day, my name's Rudy. So why do older people say just buy the banks? That's all you need to do. Well, in this video, you're going to go through why they say that and also go through some chart patterns applying them to the banks, which will show that right now they're a sell, but we'll apply chart patterns since their inception and how you could have, if you wanted to, get in and out. Alright, so we'll start with ANZ. A is the first letter. So 1990, look at that chart. Eh? What a ripper. Beautiful looking chart. What, $5 up to $30. 1993, 10 years. Wow. It's like a spec stock. Alright, so then okay, so here's our first trend line. That 2008, that's the GFC, which everyone knows about that. So that's when we first broke our trend line. You can see as we go on, so then we eventually came down, tested support here, and then we had a bounce, and we bounced right back up to the breakdown zone. I'll explain what this line is here soon. Okay, and then we couldn't break through, came back down. Okay, so we built up all this momentum here. Then bang, we break through, and because we've got this rounded bottom here, we can set a target move, the depth of it, add it to the breakout is here. So we break out. I'll explain what that line is later. So we break out, up, woohoo. Okay, so these things aren't precise, but it gives us an indication that, okay, well, this should be near a top, but you can't pick that top. But you can see here we've got this rising wedge. So breaks of rising wedges are bearish. And we can set a target move. You take the distance, so the widest part of the wedge there, and you add it to the breakout point, so it gives you a target price down here. Okay, but again, you don't just buy blindly, you got to wait for price action. So you could have bought that, but nah, you can't. But it was just to show the point that the chart action did align. So then we so that's 2015, yeah. So we bounce up and then we down, and then we get hammered here and break support here. Okay, so we're still underwater. Imagine if you bought here on that day, and we're still underwater. I'll explain what that is later. Still underwater, and then we got, okay, one of these building up momentum, and we're out, we're off. So again, we've got a target price, the depth to add it to the breakout. Okay, so 2024 beginning, we're still below 2015. Anyway, so we've shot up, and I'll just go to a weekly chart now to get closer to the action. So you can see we've shot up. We formed another short-term rounded bottom. So price target up here. I'll explain what that blue line is later. Okay, so we hit it here. It's no confirmation of a sell. There's still an uptrend. Okay, well we kept going. So we're now, there's the top of this one. So now we know we're at somewhere near a longer term top, but you don't know it's a top. And you can see we've got another one of these rising wedges here. There's the deepest part of the channel, the wedge. So add it to the breakout. That gets us target down here. And we've also got another one of those not a rounded bottom, but a rounded top. So take the depth, the depth of the rounded before it breaks down. So add it to there. So that gives us this target price of $30 on ANZ, which, you know, that's fine. I mean, that's, you know, what's that? 13%. Yeah, that's right. But the point is, might be another 10 years before you get back up here again. So we bounce to here. So we go down to there, we take that, yeah. But then you spend your next 10 years of your life invested in something that just goes sideways. So if that's what you want to do it. All right. So just looking at the other banks. So so we'll have a look at NAB. So I'll go through a bit quicker, but so you get the gist of it all. Okay, so NAB again started off with a ripper. Okay, so it had a bit of a different chart pattern. It didn't really break down, so it sort of basically kept going. So this is where its real uptrend line began, but it did have this rounded bottom here, which gave us a price target here. So that was, so if I was doing my charting correctly, so that was a clear bottom there that matched with that. Okay, so then it's come down. Okay, it's done. You can't really buy any of these. Well, you could have, So it's had the rounded bottom, the breakout. So target, and then we've got a rising wedge here. So we've broken it. So you're out. And then it's just sideways to down. So again, this is 2015. It's just done nothing. Okay, so we break out. So again, we've got our rounded bottom, the depth added to the breakout. Okay, so we pull back to a weekly chart. So there's the breakout. That's our target price. So we got pretty close. So we've got our rising wedge here and a rounded top. So we've got we've got this target price, the depth to the breakout, and the rising wedge breakout. So the widest depth added to the breakout. So it gives us a target down here. Which again is, yeah, okay, so what, it'll bounce back, but the chances is just these rising wedges are hard work. It's a big punch in the gut. There's no way it's ripping right back up. And things like interest rates, lower immigration, employment, so they're all going to be like fundamental factors, but the chart, it's all baked in. So what's the... so we've done ANZ, done NAB. All right, where's Westpac? Oh, there you go. All right, so Westpac. So we'll have a look. So you can see, and you can imagine if you bought Westpac like at $3, it's now 39. That, like, you know, you don't care if the share price could drop 50% and you wouldn't care. But you would care right now if you were buying it. Okay, so we're watching Westpac What a ripper. 3 to 30 bucks, 10 times your money, eh? Alright. So then we break the rising trend line, so we're down. Okay, so we've got another one of these rounded bottoms building up power, and then we break out. So I should mark. So mark down, mark up. Okay, so again we've got a new target price, the depth to the breakout, and we're off. We're up. Okay, so we get pretty close. Pretty close to the high, but you can't, it's not confirmed yet. So then we've got our rising, it's more of a channel, more of a rising channel, but again they're bearish when broken. I'll explain what this one is later. Okay, so that's 2015. So we had another little bit of an attempt, and then couldn't do it. So then down we go, down. Now a bit different of a chart pattern. Remember, we've got this declining wedge type of thing here. So again, take the widest part and add it to the breakout. So we'll have a look at that. So we're buying there, okay, and then nice. So 2024, if you bought it, yeah. If you bought it back here, remember 2015. All right, so now you've just gotten back to where you were. Okay. So here's our target price, target measured move. We'll go to a weekly chart. So we're up, and we've got this rising wedge happening here. We had a little rounded bottom, so there's the black depth added to the breakout. That gives us a target price here. So this top, so we had tops looking between here. That was our topping signal looking for a high around here. Okay, so now we've got this rounded top. So we take the depth and we add it to the breakout zone. So that gives us the target price here. Then we've got a rising wedge. There's the deepest part. So we add it to the breakout from the declining wedge. So that gives us target prices down here. But again, there'll be no ripping up. Okay, and then we finish with the king, who there's a reason he is the king, because he has done extremely better. I haven't marked him in, have I? Well, let's just do it quickly then on the run. So Commonwealth Bank. So $7, 1990, and then just right up. So you got to another 10 times your money basically. Then it's broken trend. Okay, bounced back up. Then kept running. You can see it's been a lot less volatile. We could have, probably should have, like you could, like there's your bull flag, and then break out. Anyway, so you can see it has been. I can understand saying Commonwealth Bank. If there is a bank you're going to buy, it's probably the one. Because you can see back in 2015, where the other banks had, like back here, like Commonwealth Bank's just ripped it. But even kings have their day. So this was actually a nice, I started the channel beginning of last year. So there was a nice little declining wedge. The same goes but the opposite. You buy them. We had a shooting star happen right here, so that was a sell. Anyway, so Commonwealth Bank, so it's actually got a bullish, that's a bullish breakout. So it's definitely not as bearish as the other ones, but it could be forming a rounded top. This is getting more presumptuous, and if it does break at 167, then it's got a target price down here. But you can see it's, that could be just form support to keep going. So the takeaway of that is, if you are going to buy a bank, it's CBA, but why, especially now at current prices, the 2.8% dividend, you're definitely not going to be buy it for the divvy, and you're not going to get growth. So if you're looking for ideas on where you want to invest, join the channel. $10 a month. ASX US shares, ETFs, and we do not touch the banks. All right, have a good one. Happy Anzac Day.